Good morning and welcome everyone. Thanks so much for joining us today for our third webinar on VAT GST promoted by IFA Brazil, ABDF. This morning we'll discuss best practices, international models, and also the tax reform in Brazil with our fantastic speakers. I truly believe you are making history here by bringing together some of the best VAT GST scholars in the world. Professor Rita de la Feria, Professor Cedric Knowson, Professor Richard Bird, and also our amazing discussants, the best Brazilian experts, Ricardo Varsano and Professor Fernando Rezende. And these two together, by the way, were the ones who first proposed a VAT, a real VAT to Brazil in 1988 in our constitution. I would like to say thank you to ABDF and my co-organizer, Ana Carolina Monquillo. We have with us here today my dear friend, Marcos Catão, who is director of ABDF IFA Brazil and a member of the Permanent Scientific Committee of IFA and also a great lawyer. I will pass the mic quickly to Catão to address few welcome words. It's for you, Catão, please.
Thank you, Melina. Thank you all. First of all, welcome to you, so to my dear friend Rita, Sibren, Richard, Fernando, and Ricardo. No, it has been a very, very interesting lives here that we have here. I mean that you are talking all the time in Brazil about reform, tax reform. Actually, I think that in Brazil you need more than a tax reform. Anything that you need a reform of the country. But I mean that maybe first step is going to be the tax reform. Thank you all. Just a few words. Congratulations again, Melina, Ana Carolina. In my opinion, this one be one of the best years of our lives, and it's so important to us, to Brazil, but also to all other countries. I mean that we have this conundrum regarding how we're going to tax the technology. It's very important. I think we have a lot of challenges. We have this dispute between the United States and Europe. I understand that for the Europeans, it's very important to accommodate some new challenges in terms of technology. I don't think that maybe the GAFA tax that's going to be the solution, but I mean, you have to think about this. So this very interesting seminar, it's a contest that the seminar is very important. It's very important to think about the problems that we have right now in Brazil, but also the problems that we have around the world in other countries. So congratulations for you all. Thank you for coming. Thank you for supporting ABDF in these events. Okay, thank you very much.
Thank you, Catão. So just before I introduce the first panelist, I just wanted to say that we already had two webinars, one about VAT GST financial service in English, and with amazing speakers that I'd like to thank again. And I think some of them are watching us now. And second one about the digital service that was in Portuguese and Spanish. These first two are available on YouTube, BDF channel on YouTube. And next week we'll have another, the final and fourth seminar about alternatives to the tax reform with great Brazilian academics as well. So I will introduce each panelist as they speak. So first one, our first speaker will be Professor Rita de la Feria, who is chair in tax law at the University of Leeds and international research fellow at Oxford University. Professor de la Feria provided tax policy and legal drafting advice to many governments, such as Portugal, East Timor, São Tomé and Príncipe, Turkey, and Angola. She has published widely on tax law and policy, including 4 books over 60 journal articles and book chapters. And Professor Rita de la Feria is helping us a lot in Brazil with our tax reform discussions. We'll have another workshop by the end of July, Rita, so stay tuned. And today she will discuss with us a very important topic to Brazil, how to do indirect tax reforms. So thank you very much again, Rita, and we are very glad to have you here.
Olá, eu espero que não se importem que as minhas primeiras palavras sejam em português, para agradecer à ABDF, para agradecer à Melina, para agradecer à Ana Carolina, para agradecer ao Marcos o convite para estar aqui hoje. É sempre um enorme prazer falar para um público brasileiro, mas ainda mais quando estou entre amigos. Não só com a honra de estar a partilhar um painel com o professor Richard Bird, Sibren Knossen, Fernando Rezende, mas também com o meu querido amigo Ricardo Versano. I'm going to switch to English now and to say what I said in Portuguese, which is thank you very much for the invitation from ABDF, IFA Brazil, to be here today. And I also want to thank particularly to my co-panelists, Richard Bird and Sibren Knossen, who were kind enough to allow me to be the first one to present. Through the wonders of digitalization, I will be in Brazil today. So now in Brazil, and in a half hour in Ghana. Kind enough to first meet my committee. So without presentation, as least meant, I'm making conceptions on the directions and the now stage forms in which you have witnessed as well as the parent that is a regressive tax. And we pointed over and over again about we should access how much the rich pay VAT. Now, I would like to say that VAT is regressive, but only when you take into account savings. So, as mentioned, our panelists said both orally that VAT proportional extent to, and so if you don't, you're just deferring your consumption to the future, in which case you proportionally to your income. Now, what is slightly less convincing, and truth
Rita,
only.
Sorry, Rita, you're cutting. I don't know if there is a problem in your internet. We can't hear you very well. I don't know. It's not working very well. It's cutting all the time. Sorry.
Okay.
Let's see.
Okay. So what I'm going to try and do. Can you hear me better now?
Now it's better, Rita. Thanks.
That's fine.
So I moved to instead of the internet and Wi-Fi connection. Okay, so as I was saying, in essence, VAT is regressive to some extent, but only on the top of the income distribution. Until you start saving, VAT is broadly, if you have the paying everything that you are. It is regressive. We try to address this regressivity traditionally by introducing exclusions from the base. We
Rita, sorry, is it still cutting? Maybe you can turn off your camera, will be better. It's still not good. Can you turn off your camera maybe, or try something like that? Sorry.
Tell me if it's better now.
No? Yes, now we can. Yeah, now we can hear well, but maybe let's try now. Or they're saying here that you can turn off your camera and come back again, maybe, or just turn off. shut off your video. Okay, let's try. Okay, let's see.
Can you?
Now it's much
better. Can you hear me now?
Yes, now it's yes. Thanks,
Okay.
Rita. I think
so the way we tried.
Sorry, Rita, if you can start from the beginning, but because we didn't hear anything. Sorry about that.
Oh my God. Oh my God. Okay. So to sum up, there is a regressivity problem, right? VAT is perceived as a regressive tax. Now, the regressivity problem is not as serious as we think, as people often think it is, because it's only regressive when savings kick in. But there is still a regressivity problem. So how do you address that? The traditional approach has been to introduce reduced rates of VAT or introduce exemptions. Many countries around the world use that approach, inspired by what is known as the traditional European VAT model, which is the European model from the 1960s. Younger VATs, so VATs that were born after the 1980s, tend to have a lot less rate differentiation and a lot less exemption. So this is the case, obviously, of New Zealand, which is regarded as kind of the paradigm of the perfect VAT system. But it was also the case of Canada, for example. Now, the traditional approach doesn't work very well. Introducing reduced rates of VAT and including exemptions doesn't work very well, which is why, in essence, New Zealand and all the countries that came after 1980 do it less. And it starts with what I call the incidence problem. Basically, if you exclude things from the base, if you apply reduced rates of VAT or if you apply exemptions, you think that the prices are going to come down. In truth, often they don't. So the rate of pass-through to consumers, so the extent to which consumers feel the reduction of the VAT in the prices, is not a clear cut. So often we decrease the rate of VAT, but nothing happens to the price. Now, we have done many experiments around the world. There isn't an homogeneous response, but what we know, broadly speaking, from the empirical evidence is that the reduction in the VAT is often not passed on to customers, and it's absorbed mostly by retailers. So whatever we're trying to do by addressing the regressivity, by including exemptions or including reduced rates of VAT, it's not working out very well, because that implies that the prices have to come down. But if the prices are not coming down, no one is feeling it. The second problem is what I would call the distributional effects. And I'm using here, broadly speaking, evidence that most economists would be familiar with, including Ricardo Varsano, who I worked with on many occasions in several countries around the world. In essence, the more you consume, the higher your income, the more you consume. And because of how much you consume when you're rich, it means that if you reduce the rate of VAT, and assuming that the pass-through happens, so the price is reduced, that reduction, that advantage of the reduced rate is primarily benefiting the richest people in every society. So the income distribution, the beneficiaries in income distribution are the top quintile or the top decile of the overall population. This means in practice something very simple, that if you introduce reduced rates of VAT or exemptions, to try and reduce the regressivity, in practice, you often are increasing the regressivity of the tax. Now, this happens every time that you try to do it, for example, with private healthcare, with private education, with books, with cultural events, because it's the richest that consume mostly those items. But even when you're thinking of specific essential items like food, regressivity can also increase by introducing reduced rates of VAT. So now this sounds completely counterintuitive to anyone that doesn't work in tax policy. So and even those that work in tax policy but are not familiar with VAT would find this suspicious, but this is the truth. When we introduce reduced rates of VAT and exemptions, we are often increasing the regressivity of the tax. And in addition, we create loads of other problems. We have loads of always cases to do with qualification and characterization. We have loads of situations of planning, avoidance, abuse, fraud, all situations that wouldn't be even arising. There wouldn't be opportunity for them was it not for the application of the exemption or the reduced rate. One interesting fact that I always mention on this is if you look at the cases in the European Court of Justice on VAT avoidance over the last 20 years, only two of them do not concern exemptions or reduced rates. So almost all the avoidance cases that happen in European courts are to do with reduced rates and with exemptions. And then, of course, you have the massive problem of the revenue loss. And this is particularly problematic because the money that you don't collect by applying reduced rates of VAT or exemptions is money that you don't employ in public sector. And the issue is that the beneficiaries of the public services tend to be precisely the households that you are trying to protect through the regressivity, trying to protect by introducing reduced rates to reduce the regressivity. So the truth is, on a cost-benefit analysis, reduced rates and exemptions have massive costs, and the benefits are at best dubious. And this is why from the 1980s onwards, you have this new approach. You minimal exemptions, you don't apply reduced rates of VAT, and then you do welfare transfer to lower income households. Now, you would think that this would be our widespread approach. So once the New Zealanders come up with this evidence and this new system, this would have been taken up by everyone in the world. In truth, that's not what we see. The take-up to this modern VAT approach is not widespread. It doesn't happen everywhere. And why is that? So what are the main obstacles? First, there is an obvious obstacle, which is what is known as the targeting difficulties. And I think Richard Bird and Sivert Knossen would certainly sympathize with this point. In developing countries, often is not easy to do welfare transfers to low-income households because the welfare system is not functioning well enough to do those targeted transfers. So firstly, there is that problem. But even leaving aside that problem, in countries where this doesn't apply, like European countries, you still don't see a move to a modern VAT. You still see reduced rates of VAT and exemptions applying. So why is that? And the answer is that this is not to do with tax policy per se, it's to do with a political economy constraint. This is the reason why we don't take away exemptions and reduced rates of VAT in Europe, has nothing to do with what we know is good policy. It has to do with constraints at political level. So if you look at the European experience, we have 40 years of resisting base broadening measures. We have tried and tried and tried. We just can't take away the exemptions and the reduced rates. Quite the opposite. If you look at countries across Europe, you actually see that over the last 40 years, we have seen base narrowing measures, more items being subject to reduced rates of VAT. And what is interesting as well is that the standard rate has been increasing over time. Now, the average European standard rate is 21.7. That has increased over time, and yet we can't broaden the base. So what is it that allows Europeans, what is the resistance that allows Europeans to increase the standard rate and no one complains, but you can't actually move items from reduced to a standard rate and you can't broaden the base? If you look at the Australian experience, it's a similar experience about narrowing, but it comes from a different place because the VAT, the GST, in Australia is much newer, and they only introduced one reduced rate of VAT for one item in Australia, food. So what you see is that the base is broad to start with, but even then there is loads of pressure to narrow the base. And just last year, the Australian government succumbed to the pressure and included sanitary products, female sanitary products, on the scope of the zero rate of VAT. There is loads of stories going around the world about the political economy constraints. I'll just mention one of the most famous ones of all, the Irish children's shoes. In 1980, Ireland was a country that was suffering from a high budget deficit and with a weak economy. In a desperate attempt to balance the books, they took a series of measures on the national budget of 1982 for 1982 that included a base broadening measure that would pass loads of items from a reduced rate of VAT to a standard rate of VAT. One of those items were children's shoes. The budget discussions ended up concentrating almost exclusively on the children's shoes increase in VAT. The headlines in Ireland at that time was, "Government wants to tax children." The budget didn't pass, the government fell, and in essence, new elections had to be called, and the party that was in government lost the elections and the opposition won the elections. To this day, there is a myth around Europe that in essence, it was the VAT attempt, the attempt to increase VAT on children's shoes that made the government in Ireland in 1981 fall. There is many other stories that I could tell you. I don't have the time, but they're often pending on an emotional topic. So Ireland was about children, and the UK has been situations about gender and tampons. In Portugal, it has been about the employment, the poor skilled workers working in restaurants. UK has also stories about class struggles, such as the pastis tax, is about an increase in VAT on products consumed overwhelmingly by low-income households. So all of these stories have one common thread. They all concern something that people emotionally feel strongly about. And this leads me to the political economy constraints. What ties all of these stories? What is happening around the world that makes us want to narrow the base and prevents us from broadening the VAT base? It all starts with what I call here the information asymmetry. The general public doesn't know what we know about VAT distributional effects or the no pass-through of VAT reduced rates. So they feel instinctively that if you reduce the rate of VAT on key items, they will immediately protect, the prices will decrease and they will immediately protect low-income households. So it starts with that information asymmetry. The information that we have as tax experts and the information that the general public has are not the same. But then something else kicks in, the lobby groups. The lobby groups give salience to a tax that normally doesn't have much salience. Usually no one really cares about VAT. It's just there. But then you have lobby groups organizing around a specific topic and they give salience to that topic. Now, why do they do that? That is clear, because they want their products to be subject to a lower rate of VAT. That is a very clear advantage for them. But how do they convince the public is an interesting thing. No one is going to be convinced if a producer of tampons says, "Oh, I want to increase my margins, and therefore we should benefit from reduced rates of VAT." No one is going to be convinced by that. So the framing is key. You have to frame it in a way that the public will feel sympathetic, a fairness narrative. So it's not really about increasing your margins. It's about gender. It's not really about increasing your margins. It's about children. It's not really about increasing your margins, it's about poor skilled workers, and so on, and so on, and so on. The framing is built around the fairness narrative, giving salience to one specific item. People then feel fearful, they feel a loss aversion, and they want the status quo to be kept. Now, even if you explain all of this to them and say, listen, we will do welfare transfer, then there is still another obstacle. They might just not believe you. People tend not to believe on what is known as a two-step policy. They have something, they are told that if they stop having something, they will get something else, but they are worried that if they give up the first thing, they won't get the second thing. They are worried that the welfare transfer won't come afterwards. So they don't believe you. How do you do it then? How do you stop these constraints? And this is my message to the Brazilian tax reform. First of all, we have to combat the information asymmetry. We have to fight for information. We have to explain to people what is really at stake. But when we do that, we can't do it by saying this is about GDP, or this is about, eliminating distortions to competition, because no one knows what you're talking about. No one knows what is a distortion to competition. And even GDP is just a vague concept. What do you have to use then? You have to frame it in the same way the lobby groups do, with a fairness counter narrative. So this is about protecting the poor. This is about collecting money from the rich to invest in public services that will benefit the poor. We frame it in the same way that the lobby groups frame it, but we give the counter narrative of fairness. This is about fairness. Tax reform in Brazil is about fairness. It is about collecting money from the consumption of the rich to put in public services that will benefit the poor. And if all else fails, and I'll switch my camera now on for this, if all else fails, blame the others. Blame the external culprit. Now, who is that external culprit? The external culprit could be the IMF, the OECD, could be the general economy in the world, or it could be someone else. I sometimes say, well, you could just blame me. Because in essence, this is what Europeans have been doing for a long time in Europe. When all else fails and national governments don't know what to do, they blame Europe. I'm sorry, we really wanted to do something different, but Europe, you see, Brussels doesn't allow us. And this is my final message. Combat the information asymmetry, give them a counter narrative of fairness, and if all else fails, blame someone from the outside. And that's it. Thank you very much for listening to me.
Thank you again, Rita. It was wonderful. Your presentation is truly wonderful, because we have all these narratives you described in Brazil, and VAT regressivity is a strong resistance in the tax reform discussion. So your presentation is very helpful for us in Brazil. Before I present the next speaker, I'd like to say thank you to our very qualified audience watching us on YouTube and Zoom, especially Professor Pierre Pascal Gendron here from Toronto, good friend of Professor Richard Bird, Cornelius Flash, a hacker from the World Bank, Professor Ernesto Lozardo, Bernarda P., Guilhermo Terreiro, Eduardo Fleury, and our friends from tax administration, Angelo De Angelis and Rodrigo Frota. Thank you very much for watching us. I'm very happy that you can follow our discussion. Our second speaker is Professor Sebron Knudsen, who is Emeritus Professor of Tax Law at Erasmus School of Economics, Emeritus Professor of Economics at the University of Maastricht, and Professor of Economics at the University of Pretoria. He is the co-author and author of several books and numerous articles on the design and economics of taxation. As a consultant to the IMF, World Bank, OECD, European Union Commission, and other international and national organizations, Professor Knowson has advised more than 30 countries on the design and reform of their tax systems, most recently Zambia and Aruba. Here, I would like to show his latest book, Reforming VATs in Africa, that was published last year. So it's an amazing book, not only to understand the African context, but also all the VAT general concepts in general. So it's very, very good. I strongly recommend. Professor Knowson kindly prepared the presentation very focused on the problems of Brazilian system, and we'll discuss now if a true VAT will ever come to Brazil. Thank you very much, Professor Knowson, for being here. So we pass to your presentation. Let's, Thiago, please, can you put his presentation? Yes, thank you. You're on mute, Professor.
Okay.
Yeah, great.
I'm on. Thank you very much, Melina. Well, I have an incredible difficult act to follow after Rita's talk. I think that's pretty much impossible. I wish we had switched places, and I would have been first and you second. That would have been much easier for me. Hey, Melina, thank you very much for inviting me, and also I'm glad to see all these friends. I have only one comment on Rita's presentation, and she said that the European VAT was the traditional VAT. Well, I think the European VAT is an anachronism, so it's greatly outdated, and for several reasons we can't make it better than it is. Let's have the next slide, Melina. Thank you. I looked at the Brazilian tax system, and I'm forcing an open door, no doubt, when I say that it's incredibly complicated and distortive. There's only one country where I've seen and commented on the same kind of goods and services tax regime, and that is India. We have really good VATs, and then we go to New Zealand, Australia, Canada, Singapore, South Africa. We have bad VATs, and that's the European Union countries, and we have ugly VATs, and that's when we go to, I think, India, and I don't want to mention the other country. What I think is important and what I recommended highly in India is that VAT design issue, what should be taxed, should be divorced from tax assignment issue. Who should tax it? Who should get the base? Who should determine the rate? Who should administer it? Let's divorce these two issues and start with one issue at a time. And I think one of the important things is that, and the European Union is doing that rather well, India less so, but that goods and services should be taxed where consumed, not where produced, because manufacturers and traders should be able to source anywhere, manufacture anywhere, and sell anywhere without encountering interfering taxes. Not they can pay taxes, get proper credit for it, etc., but they shouldn't be stuck with interfering taxes. And I do not think that it's really necessary to impose an identical VAT at the federal and the state level. I think that's an important point to remember too. We have a common base in the European Union. The Indian VAT doesn't, and it is not necessary that it has. I think an important point to remember is, and that's where India had great problems, is that we should switch from classification and valuation issues, that's a sort of excise tax approach, to audit practice, to accounting practices, to check compliance through books of account, rather than grabbing the goods and classifying them and valuing them at some rate, as we do under the IPI, and as we do when we impose taxes on exports from one state to another state. And I think that too, the IPI, the excise duties, the proper excise duties that is, should be separated from the VATs. Now, as regards principles, and that's the next slide, Melina, of taxation, I would really argue for a VAT to raise revenue and revenue only, not do anything about income distribution, about product protection, or about internalizing externalities, only revenue and revenue only. And with that revenue, of course, as Rita has emphasized, you can do quite nice things for the poor in terms of education and healthcare. And excise duties should only be used to enhance social and market outcomes by internalizing external costs and perhaps some excise duties to improve the progressivity of the tax system. And import duties I'm leaving aside, but they should only be used for protectionist purposes, if at all. And I wouldn't favor that. Let's look at the scene in Brazil, Melina. And that's being shown now, if I'm correct. The next slide, please. Here we are. Here is a sort of, we are all familiar with this, no doubt. We have the ICMS imposed on goods, the coffins, the PIS, PASAP, the IPI, and ISS. And some are, ICMS is only imposed on goods, coffins and PIS on goods and services, but they have cumulative elements in them. The IPI is a sort of extended excise tax system administered at the federal level. And the ISS is a low rate tax on services administered by municipalities. If we look at this, then the total burden on goods, in particular, less so on services, is extraordinarily high, must be one of the highest in the world. We also see that all of these jurisdictions sort of occupy the same tax base, get in each other's way, etc. And it's highly distortionary. And what I find useful to know too, that the federal and the state government occupy very much the same tax base and collect about the same amount of revenue. That is something like 7% of GDP. Maybe we can have the next slide where I sort of summarize my observations on the tax system in Brazil. 13.7% of GDP, particularly on goods, is extraordinarily high. I don't know any country where it is as high as it is in Brazil. And I believe that it sort of accounts for 50% of total tax revenue collected by all governments in Brazil. ICMS is incomplete and services are not taxed, and so is the ISS because goods are not taxed. There are turnover tax features which cause inefficient accumulation of tax. They hamper business specialization and hurt investment. The IPI, being a manufacturer's level tax, causes distortions because trading margins are not included in the valuation for tax. They cause valuation problems, definitional and avoidance issues, all because they are levied at the manufacturing stage and not through to the retail stage. These classification issues make the system very complicated and divert focus of compliance control from accounting checks to sort of bureaucratic and definitional issues. There are 300 rates under the IPI. And it's amazing, but Brazil does not have a small business or registration threshold. And that means that lots of people are going to be busy with trying to monitor compliance by very small taxpayers instead of focusing administrative resources on the tax registrants that yield most of the revenue. As we all know, some 90% of VAT revenue is collected from some 10% of the VAT taxpayers. So that shows where the focus of your administrative efforts should be. Let me just briefly show you the best practice VAT on the next slide, please. This is what the best practice VAT is. Retail state service, we all know that. Single tax exclusive rate, immediate credit, destination based, minimize administrative and taxpayer discretion, based on self-assessment, high threshold, and that obviates the need for taxpayer substitution, which we have in a lot in Brazil, where a taxpayer is also responsible for the VAT to be paid by his clients and the clients of his clients. The next slide, please. Well, this is again probably an open door. Include services in ICMS base. In India, the constitution did not allow the states to tax services. They were the domain of the central government. They changed the constitution in that respect. I'm not sure why in Brazil the services cannot be included in the base of the state VAT, but here you are, and it is in practical terms, theoretical terms, it's impossible to separate the taxation of goods from services. There's coffins and PIS and PASAP. You wonder why there isn't a federal VAT which eliminates the turnover aspects of these levies and establishes one tax credit VAT. And there's also this subtraction method for coffins and PIS, which means, again, that the tax cannot be passed on to customers. And I haven't looked closely at the exemptions, but I would advocate that they be limited to unprocessed foodstuffs, probably to governments, healthcare, education, margin-based financial services, because they cannot be taxed. We can't determine the value added there, housing rentals, and sale of new built housing. And I would reform the IPI into a federal externalities correcting excise tax system. That means taxing alcohol, tobacco, games of chance, maybe sugar, plastics, and fuels, and motoring, but not other items, which would be part of the VAT base. And maybe to convert the ISS, the municipal sales tax, into a gross receipts tax, which would also be levied on goods and not only on services. And probably a uniform VAT base, because I would think that it is incredibly difficult to achieve a uniform VAT base for the states and the federal government in Brazil. Maybe a uniform VAT base is not needed unless you want the Canadian solution. A uniform VAT base tends to institutionalize the shortcomings of lots of compromises and is out of date in no time. As in the European Union, we harmonized the VAT base in 1977. That was before internet, before service economies, etc., and we are still stuck with the VAT of 1977, the so-called Sixth Directive. Can we have the next slide, please? Which way forward in terms of VAT jurisdiction? Important, I believe, is that VAT on interstate transactions is zero rated, is washed out. And that would happen automatically under a VAT levied by the federal government, and it can be done by zero rating under the state VATs. Well, we have three models to choose from. Canada, of course, which has a federal VAT, piggybacked provincial VATs called harmonized sales tax, and separate provincial retail sales taxes, I believe, in 3 provinces, and no VAT in or retail sales tax in Alberta. And there, the federal, and that's what is so good about that system, the Federal Tax Administration can do all the auditing, except, of course, with respect to retail sales taxes. The European Union doesn't have a federal sort of VAT umbrella. It does have a common base. It has country-specific rates. They differ between one country and another, although there is a minimum rate of 16%. There is zero rating of interstate and foreign exports and reverse charging of interstate and foreign imports. And that system seems to be working well so far. And these interstate sales and purchases have to be reported and are matched in one way or another. And the joke is that you have to put the VAT identification number on your invoices, etc. And you can call the Ministry of Finance for the identification number of your foreign client, and that the name of that lady at the Ministry of Finance is Miss Match. Then there is India, of course. Oh, then there is India, which has a center GST and a separate state and union territory GST. They say they have a common base, but what I've seen of it, that is some way from the truth. And what they do is they impose a separate VAT or GST, they call it, on interstate transactions. And that leads to a lot of problems, particularly liquidity problems for businesses. Let me look, I said, let's separate the excises from the VAT. So I would like to have the next slide. Here we've got, Melina, can we have the next? Thank you. Okay, the principles of excise taxation, internalize external costs, not for revenue. That's what the VAT is for. Of course, the revenue yield is a welcome side effect, a specific rate, because that's closely linked to the externality. They should be imposed on consumer and producer goods, but revenue excises should only be imposed on consumer goods, not on producer goods. That violates the Diamond-Merri's theorem. And of course, imported excisable goods should be subject to the same rate as domestically produced goods. And excises on luxury goods, of course, if considered desirable, I think they are not, should be imposed at ad valorem rates. Let's look at the next slide, please. Here we've got the products that could be that can be subject to externality correcting excises, and excises, that is important for Brazil, can be an important instrument for solving revenue issues between the states and the federal government, and they fulfilled that role in India when a nationwide VAT was introduced. I have a few conclusions, Melina. The next slide. I think it's at a crucial crossroad in its fiscal history. It can choose between a good VAT, Canada, Singapore, South Africa, a bad VAT, EU member states, outdated, anachronism, and an ugly VAT. And the economic cost of an ugly VAT may well be 1 to 2% of GDP. VAT should not be used to influence the tax burden distribution. We've got the income tax for it. To protect industry, we've got the input duties for that. To promote economic development, we've got tax incentives under the corporation tax for that. I don't favor them, but that's what we have. Or for any sort of worthy goal. Only revenue, and the revenue can be used, of course, to finance worthy goals like education and healthcare. And I believe that if the federal government and the states get together, they should not focus on tax-based issues, because that should be as broadly as possible, but on each government's tax day. It's on the rates. How do we divide the revenue, or what rate can each government apply? And exemptions, I said that already, should be confined to unprocessed foodstuffs, and zero rating should be limited to exports. And excise type of taxing methods, and we have that for the IPI as well as for the export taxation under the state VAT, because there we are confronted with valuation issues, should be replaced by audit approaches to monitor compliance. I've got a few quotes from the book, which was just shown. Melina, next slide. Thank you. Here we are. This is the first quote, and you can find it in front of the book. It's very difficult to make changes once mistakes have been made, and that's what Michael Keane said in 2009. And Brazil here too. If we go for a real modern tax system on goods and services, then we want to avoid mistakes at the beginning rather than try and correct them later. We've got lots of experience with that. And the second quote is from Richard Byrd and my good friend Pierre-Pascal Gendron, who is listening in on this, I believe, and that good VAT design makes good VAT administration easier. And that is important to remember too. And the last one is sort of an answer also to Rita's, she might use that as an epitaph to her paper, is that efficient regressive taxes, when combined with generous, well-targeted transfers, can result in a net fiscal system that is equalizing. Here we are. Thank you very much, Melina.
Thanks so much, Professor Knudsen, for this amazing presentation. I'm sure we are all very impressed by your knowledge of our Brazilian system that's so complicated. And thanks for all for all your analysis and the suggestions in respect of our tax reform. We truly appreciate this. So I will pass to our last speaker that I'm so proud and happy to announce him. It's Professor Richard Byrd, who is Professor Emeritus of Economics, Rotman School of Management here at the University of Toronto, also Senior Fellow of Munk School of Global Affairs, also at the University of Toronto. He also spent several years with the Fiscal Affairs Department of the IMF, and before joining U of T, he was professor in Harvard, and also other universities, and visiting professor in many, many countries, as well as a frequent consultant to the World Bank and other national and international organizations. He has published an impressive number of books and articles, especially on tax and public finance issues, with special emphasis on the fiscal problems of developing countries. So on behalf of all of your readers and around the world and all the audience here, I'd like to say thank you so much, Professor Byrd, for all your wonderful academic contributions to the VAT GST road. It's truly amazing. And today, Professor Byrd will also talk about Brazil, discussing the tax reform proposal in the Congress and also the Canadian dual VAT as an option to be adopted in Brazil. As I told you, Professor, the dual VAT was proposed already here in Brazil by a group of experts that I was part from IPEA, and it was led by Professor Ernesto Lozardo. And this is the IPEA proposal. And this week, the Minister of Economy announced one more time that the federal government, who is not supporting the proposal in the Congress, the federal government will present a proposal based on a dual VAT. So this is amazing, and your presentation will be very, very helpful. And so we are all willing to see your presentation on this, Professor Bird. Thank you very much again.
Oh, thank you, Melina. You'll notice the title I assigned to these slides is kind of strange. VAT 1, 2, 3. What I'm going to do is talk about the middle part of that proposition, primarily 2 VATs, but I want to mention the third. So if you go to the next slide, please, Melina. To use Seaburn's terminology, turning the ugly into the good requires both a good base and a good administration. But it doesn't mean a perfect tax. And even if 2 levels of government levy their own VATs, they can come quite close to getting a good VAT, I think, which is kind of what we've done in Canada. And that's what I want to talk about. I do want to point out, however, that as Seaburn emphasized, that excises have to be considered and probably reformed separately from whatever you do with the general sales tax, the VAT. I think the same is true with respect to the local business taxes. He didn't make a point of this, but at the end of his slides, he mentions the possible gross receipts tax as a local government revenue source. And that's kind of what I would advocate too. I'll come back to that at the end. Now, the interesting question is always, in any country, is how you get from here, wherever we are now, to there, wherever we want to go. To do that, we need to have 2 conditions satisfied, 3 conditions satisfied, taking Rita's arguments into account because she's quite accurate on all of them. First, we have to know exactly where we are, how we got there, and what the effects of it are. Secondly, we have to know where we want to go and have a very clear idea about that. And thirdly, we have to know how we can sell this transition from here to there, which is the political economy aspect that she's so properly stressed. I think it's possible to do it. I don't think it'll take 50 years, which was one of the transition periods I noticed in the IVS proposal, but it's clearly a major political challenge. And the question I think you people in Brazil really have to be thinking about very importantly at the present time, does the crisis situation that we're all in now, in Brazil quite badly, as far as I can make out, does it make it more or less likely that a VAT reform may lie in your future? I mean, I think it may make it more likely if it's framed correctly and sold correctly, but it's also less likely that enough attention is going to be paid to this proposal in the present context. So it's really a problem we all have. Next slide, please. Oh, you're on it already. No, the next slide. Thank you. As I said, I'm not going to talk about what a good VAT is because I think Stephen covered that quite adequately. I have a paper that I was originally going to present here on VAT. It's called VAT in and after the pandemic, which will be published shortly, and I'll be happy to supply that to anyone who wants it. But what it really says is just what I just said, that the crisis is going to require changes in fiscal systems. And it's an interesting question about what the implications of those changes are going to be for tax structure. We haven't really thought this through very well. My own reaction is very much that if you can move towards the good VAT, and I think Seaburn Austin sets out very clearly what a good VAT is, then we can do it. But if it can't be sold, then we'll have to see. So anyway, the question I want to consider in this talk is basically how you can make 2 VATs work. One country, 2 levels of government with VATs can work. Now, just flick to the next slide for a moment, Melina, please. There are many possible ways of looking at this. I first began to think about this actually in Brazil when I was there in the early 1990s at a conference in São Paulo. And I had said something like, you know, you really can't have these 2 VATs because we were just starting it in Canada and it was such a mess. And on the flight home, I began to think about the Canadian system and to understand that it actually worked. And then over the next 20 years, with a lot of help from Pierre Pascal Gendron, I tried to figure out exactly how it worked and why it worked. There are a number of alternative systems that are put forward here, and I just summarize them and suggest a few criteria that people might use in thinking about these proposals. What's called the CVAT there is really Ricardo Varzano's original proposal with a little modification from Charles McClure, but that's a Brazilian original proposal. The VVAT thing is Mick Keen's and Steve Smith's proposal for the European Union. The joint VAT is the kind of one big VAT system, the kind of Australian system. The separate VATs, that's just kind of ignoring each other, and that's lots of problems. The dual VAT is really the thing I want to talk about today. So let's go back to the previous slide then, if I may. As I said, I can't discuss all of these alternatives. I would be quite glad to do so if there are any questions, but any difficult questions I'll ask Ricardo to deal with. But what I want to do really is talk a little bit about Canada. So let me go then to the Canadian slides, the 2 slides down, I think. Next one, that one. Now, I noticed I did not mention something at the beginning of this slide, which is not obvious if you don't know Canada. Canada is the only country, to my knowledge, in which the value-added tax is quoted separately to the consumer on every transaction. It is a highly salient tax in the language we now use. It's visible to everyone. It always has been. It's always been a highly political, very obvious source of discussion. So that makes it kind of more interesting that we managed to end up with a fairly good central VAT system. There's a story that Pierre can tell better than I can, but basically we had a pretty well developed VAT system. There were about 3 years of committees working on the VAT. I was actually on one of these committees, and we developed the system, which was pretty good. The government brought this bill forward for discussion in the Parliament. A question was raised by a lady in a taxpayer meeting with the then Prime Minister about why we were taxing food. The Prime Minister didn't have a good answer. He then came back and told everyone that we now had to basically zero rate food. But he said essential food. So nobody knew what essential food was, or basic food is the word we use, basic foodstuffs. Nobody understood what this was. So a committee was, of course, set up to determine what were kind of basic groceries that should not be taxed. I spoke to several of the members of this committee. They told me there were 5 men and a woman on this committee. And all the men turned to the woman and said, what are basic groceries? And she said, I don't do the shopping in my family. So actually the committee set these decisions up based on no information, which is very common of these exemptions. But we, as a result, have a system which is integrated with the income tax. We have a GST credit offsetting it. That was an attempt to sell it. But we also have a very awkward exemption for basic food, zero rated, which causes a lot of trouble. That's because the people who developed the system, and I had a very minor role in this, but the people who developed the system really didn't think about how to sell it. I can't overstate this. How you frame and sell these things is critical. Anyway, if you don't do it right, you sometimes make mistakes at the beginning, and you have to live with those mistakes ever after, which is one of Seaburn's lessons. Well, we have a fairly good VAT. We managed to get the 5 provinces applying their own rate to almost the same base. And then we actually collect those taxes. They're called the HST. There's another story about why it's called the HST, but anyway, basically because the man who got elected prime minister on anti-value-added tax legislation after the government that introduced the value-added tax was severely defeated, he then said, I will abolish the GST. After a year, he realized he couldn't, so he changed the name to the HST. And we now have a GST, HST. And we managed to get a couple of provinces on board. But anyway, it's a long story. So the 5 provinces now apply their own rate to almost the same base. This tax is collected centrally and it's allocated to the, and this is really extremely important, and it's allocated to the participating provinces in proportion to the share of taxable consumption in the province, not on any transaction basis, on an accounts basis. Actually on a statistical basis, macro statistical basis. We have another province which applies its own rate to almost the same base, but collects its own tax and also collects the central tax in that province and is paid a fee for doing so by the central government. We have 3 other provinces that have their own retail sales taxes with different bases and their own collection, and 1 province and 3 territories with no taxes of this sort at all, and only the central tax applying. So it's a fairly complex system. Next slide, please. But I want to tell you the story about how we got there, because I think this is a lesson for Brazil, which is pretty important. It took over 25 years. This is not counting the planning period, but it took over 25 years to get from where we started to where we are now. And there were a series of steps. This is a rough summary. After about 15 years of study and a major political fight, we did adopt that federal GST, the General Goods and Services Tax. It has another name in Canadian politics that I won't use, but it was adopted. But the government then lost the next election by the largest defeat any government had ever taken. Now, there were 2 things that happened. We signed a trade agreement with the United States, and we also introduced a value-added tax, and they were both equally unpopular. And the 2 things together combined in reducing that political party, which had been a majority in parliament, to 2 seats. That's the biggest defeat any government has ever suffered in this country. Anyway, before it was defeated, the government had managed to work out an arrangement with Quebec, which was seriously concerned about increasing revenues. Quebec is a high spending province and needs high revenues to do this. And they wanted to reform their sales tax anyway. So they decided on their own, but in considerable discussion with the federal government, to levy a similar tax. It was not the same tax. It's not on the same taxpayers. They have a different taxpayer registry. They have a different base. They had a different crediting system, and they had a very quite different rate. It was really quite a different tax initially. But the federal government was happy to have somebody go along with them, not least a government which was in severe opposition to them. For most of this period, Quebec, which will reappear in the story, was run by a party which was a separatist party or strongly influenced by separatist influences. They really were talking about creating their own country. So making negotiation, that was a diplomatic negotiation at the highest level between the federal and provincial governments to get this deal where Quebec collected the federal tax. Anyway, about 5 years later, a new government, the one that had changed the name from the GST to the HST, persuaded 3 small provinces, including my native province, to adopt the centrally administered HST. It did so by bribing them. These are all small provinces with weak tax bases, and they had very high tax rates. They had retail sales taxes as high as 12%, which is pretty high retail sales tax. And they all agreed to adopt a new harmonized sales tax joint with the federal government at a rate of 8%. And the federal government paid them a large sum of money in terms of their budgets to make up for any possible revenue losses. It more than did that, which was deliberate, of course. So it made it very attractive for them to do it. So they lost no revenue. They also retained the right to make certain adjustments to the base. But at that time, they were all committed to stay on the same rate. It was 8%. The federal government at that time was 7% rate. So the total was a 15% rate in the country. A few years later, well, about 10 years later, about 3 governments later, the federal government came in on again an anti-tax program. And the first thing it did was lower its own sales tax from 7% to 5%, one of the very few rate cuts that you will find in value-added tax history. And it also went out to the provinces and tried to make a better deal again. It offered those who were participating more leeway in setting their own rates, Previously, all of the provinces had to agree to set the same rate. Now they can set any rate they want. And it also gave them more discretion on the base. And they also gave them, again, another payment. And Ontario, my province where I live now, and the biggest one in the country, then joined the system, as did British Columbia, another big, rich province. So we had, that was the high point of the GST. A year later, actually, Quebec changed its base much closer to the federal model. It changed its taxation of financial services and other details I won't go into. And another small province also signed up, but British Columbia quit. The government got in a lot of trouble and they lost, they couldn't frame this thing properly at all. And they went back to the retail sales tax. So we had, at one point we had 5 provinces on the system, then we had 6, then we had 5, then we have 6. So I mean, it changes around a lot. Now the point is of all this, next slide please, is that it just takes an awful lot, next slide, it takes a lot of negotiation and compromise. And I think I've tried over the years to understand exactly how all of this was done. I think the basic truth in Canada is that even when governments are bitter political opponents, and Quebec and the federal government are and have been in complete opposition on almost all political issues throughout this entire period, and some of the other provinces like Alberta are equally estranged from the federal government, the basic trust in how well the place is run. It's not that they think they're a bunch of crooks and can't do the job. They just disagree with the politics. What's also critical is that there's never been really any argument about the reliability of federal government statistics. The federal government statistics are used for 2 important reasons in federal provincial affairs. One, they are the allocation mechanism for the revenues from the provincial share of the value-added tax. Doesn't matter how much tax is actually collected in any province. What matters is how much of the taxable base is consumed in a province. That's what determines how much money they get. And that's based entirely on federal government statistics. They use exactly the same statistics as part of the basis for the equalization grant, which is a intergovernmental fiscal transfer. And I'll come back to that because it's quite important. Because we have the equalization system, it's based in part on the estimated shares of provincial tax bases, which includes taxable consumption, and the assumption that taxes levy taxes at the average provincial rate on those bases. Now, the result is that this system encourages provinces to raise their tax rates, particularly on items where they're major contributors to the tax base. And as I said, Quebec's a high tax province. It's also the largest recipient of equalization payments. But that's because of its population size. It's not on a per capita basis. Now, why this all worked, I think it's got to do with the Canadian political system in part. It's the peculiarity. The federal and provincial parties can be called the same thing, liberals or conservatives or socialists or whatever they are. They have the same name, but they're different parties. The provincial parties are not part of this federal party. In fact, they often disagree. And so they represent the regions, not the party in federal provincial negotiations. And they all agreed throughout the 1990s and 2000s, while all this was being worked out, to achieve the common aim of collecting taxes more sensibly. This was a critical issue in Canada 20 years ago, because we were in serious debt. At one point, the Wall Street Journal referred to Canada as a banana republic, which is not a compliment, and because of our debt situation. We also had, along with a couple of the Scandinavian countries, the quickest reversal of a severe deficit position to a surplus position of any country in the OECD. And this was, so there was a substantial cut in expenditures and increase in taxes over this period in the 1990s and early 2000s. This was really, the debt thing was really important because another peculiarity in Canada is the federal government does not borrow any money abroad. It doesn't have to, it never has done. The provinces borrow abroad. So Canada's foreign debt position affects provincial finances. And that's why they were interested in making a deal with the federal government to strengthen their own tax systems, which was kind of a unique set of circumstances. I don't know that one could replicate it elsewhere. The other characteristic of the Canadian system that, in my observation of federal systems around the world, is somewhat unusual, is how willing we are to accept considerable asymmetry in federal-provincial relations. The federal government's relations with every province are negotiated separately. There isn't a uniform federal-provincial treatment that applies everywhere. Negotiations take place between the provinces, not only on tax rates, but also a little extent on bases, but also with regard to what provinces do what. The Constitution in Canada lays out all of the important social services as basically being provincial, but the federal government gets a lot of the money. So the federal provincial negotiations on these transfers are critical to provincial political bases. So there's a lot of negotiating room. And there's a lot of asymmetry in these big issues, but also in very little issues. For example, if a province, my own home province, for example, wants to give special treatment under the provincial component of the combined federal provincial sales tax to volunteer fire departments in the local rural areas, they can do it. And in fact, in that particular case, the federal government will finance it. But if they decide they want to provide some special concessions to, let's say, the apple growers in a particular valley, and the federal government doesn't think they should do that, that federal government said, you can do whatever you want with your sales tax base, but up to a certain limit, but we're not going to pay for that. That will come out of your share of the revenue. So everything is negotiated from the smallest details up to the biggest one. So that's a kind of a, the effective government in Canada is really an endless series of federal provincial negotiations at all levels of government, up to the top, down to the bottom. It's kind of interesting, but and hard to understand. The next page, please. The lesson from I got from this story is really that endless patience, continual negotiation, and willingness to compromise on details that are essential to one side, without losing sight of the core objectives, strengthening the revenue system, was essential, as being essential to both, was really how we managed to do this. It's always a precarious balance, and it changes all the time. Now, the second lesson I get is that, picking up Sebren's earlier point, it's better to fight for a good tax than anything that's perfect. But you've got to recognize clearly that any deviations are going to be distorting and costly, and try to sell people on this. So I'm with him about avoiding zero rating and exemption as much as possible. Finally, a point he also made that I think is important, and I don't think we've done right in Canada, is you have to think more about the threshold for VAT registration. I think ours is too low. And then you have to have rules about when people can opt in and when they can opt out, and keeping the register clear, and we do that fairly well. The other thing you have to do is be aware of imports. In a developing country in particular, this is a big deal. How do you work this? We actually have a separate administration. It's called the Canadian Border Security something or other, because we had to make a deal with the Americans to make it look like there was, soldiers on the border or something. So we have a separate agreement on the border, but that administration has separate arrangements with each province, regardless of the form of the province's sales tax, whether it's a retail sales tax, their own independent sales tax, as in Quebec, which is value-added tax, but it's independent, or just a surcharge, so to speak, on the federal sales tax. They have a separate agreement with each province, and they transfer the revenues in proportion to the imports that receive, taxable imports that are consumed in the province. This can get a little tricky, and there has been some evasion here and so on, but basically it kind of works. So you've got to link the customs administration, the VAT administration, and the income tax administration to make any of these systems work properly. We have done fairly well on this, but could, of course, improve it, as one always can. But that's just part of the story. So the last thing I want to talk about is the last slide, I think. Yep. Transition period can be very long. What would worry me in Brazil is I think it would be such a big deal. And as I say, I was talking about this in Brazil in the early 1990s. So this conversation has been going on a long time. It would be a big deal to get any big change at the federal level. And if you made that conditional on also changing at the state level, I think nothing would happen at the federal level. So maybe the way to go is just to go for a federal tax and get that right. And then try to negotiate the rest of it. But it's going to take years to get this worked out. And I really wonder whether the asymmetry and the point about the equalization transfers, that in Canada we accept asymmetry and have equalization, whether those points would work as well in Brazil. The way the Constitution sets out the allocation of revenues, I mean, that kind of rigidity should never be in a constitution. But when you have it, it can be very difficult. I remember working in your neighbor Argentina once and learning that the strange percentage allocations were the result of a floods that had taken place in parts of Argentina some 20 years before. I mean, you get odd things, and you put this in constitutions, you have lots of problems. Last thing, local governments. Local governments are never discussed in Canada in this context. They are entirely, as we say, creatures of the provinces. No province gives any local government the power to tax sales. It's just not an issue. It probably should be. But in Brazil, the ISS is an important local revenue source, especially for the larger cities. So what should you do with it? You can try to fold it into the VAT. That's sort of what the Chinese did with their business tax, which was the equivalent of the ISS. You can kind of replace it, the local revenue, by revised tax sharing. That's kind of what the Indian states, when they first adopted VATs, alleged they were doing with respect to their local governments. They haven't really done it. It's much quicker to take control of local revenues than they are to repay it through local grants. So local governments never accept this, or perhaps introduce an improved local business tax. And this would, in effect, be a kind of a gross receipts tax, but I like to think of it as an income-based value-added tax if you did it properly. But that's a different story. So that's where I leave you. I don't know if there's any lessons to learn from Canada or not, except, as I said, a lot of patience. Professor Knosson gave you the good tax. Professor de la Feria told you how to get there. I've told you a little bit about how we did it. It's up to you. Thank you.
Thank you very, very much, Professor Bird, for all this lesson about Canadian model, your comments about our system, and all your precious suggestions. Canada is certainly the model that would fit better, I believe, in my opinion, the Brazilian federation system. And I believe that especially after your presentation today, this will be the model to be considered in the tax reform in Brazil. So thank you very, very much. So I will pass for our first discussant, Ricardo Varsano. Ricardo is a consultant specialized in tax policy. He works mainly for the IMF, where he was senior economist until 2010, and the World Bank. In Brazil, he had a 28-year career at IVA, and where he had been twice the research director. And Varsano with Professor Fernando Rezende, I believe were the first ones, as I mentioned before, to propose a VAT here in Brazil since 1988. So it's a long way, Ricardo, and thank you very much for all your contributions to Brazil also. And the mic is for you. Thanks.
Thank you, Melina. First, I want to thank the ABDF for inviting me for this issue, this event. I think it's a big honor to be a discussant for this panel that is probably what you have of best in the world. You cannot get better than that. So what I'll be doing here is just talking, the time is short, about 3 points. One, the exemptions. Second, about services, how to do it, what to do it, or I don't know exactly what to do it. But and finally, talk a little bit about value-added tax design. Regarding exemptions, it's difficult to avoid. The politicians love them, and we that are just advisors have no decision power. We have just to say, well, please no exceptions, and try to convince them of that. It's not only say, but try to convince. So usually when I go to missions that involve value-added tax or tax expenditures, I ask for data on household surveys that could look at how is the structure of consumption along the size or quintiles of the income or the consumption distribution. And sometimes I get, in Angola, it took 3 years to get them, but we got it. I was there with Rita. And I have some interesting results, particularly for Angola, that the general result is almost always the same. The general result shows what about I'll be showing to Angola. I want to show for you, this was something that was quite convincing for them. First, what I do here is this picture, the rectangles are the amount of consumption, the participation of consumption in the 5 quintiles, which is the same. If you give an exemption for that, this is where the exemption money that you forgone will go. So if you look at the basic basket of goods, food, the 32% of the revenue forgone goes to the richer people in the left quintile, and only 9% goes to the poor people here. Okay, so what you get is some regressive subsidy, which means it is in fact increasing the progressivity of the tax of the value of the tax. But this is one case of only the basic needs of the poor. But if you look, for example, at health and educational services, then there is a huge concentration in the rich because, of course, the poor cannot pay for health and education. They use government resources that are free for them, not for the country, but they are free for them. So if you give an exemption for health or education services, which are typical in almost every country has it, you are giving 63% of the revenue that you are foregoing for health, or 73% of the revenue foregone in the case of exemption for education, you are giving to the richest people in the country. And for the poorer, you are giving 1 or 2%. So this kind of thing is very simple computation, and it was good enough to convince the authorities, at least, that they should not exempt that. Okay? And they did it, and of course there was reaction. At the end of the story, there was some exemption, but very limited, really limited for education and health. And there is a basket of goods that is also very limited, that is exempt. So one thing to do as well, you cannot have exemptions in value-added tax exactly because of that. Most of the money will go to the rich and a little bit for the poor. The best thing to do is charge it and then spend it in something that helps the poor. And in this case, we have one proposal, which is from 2012, from Alberto Barreix, Bez, Roca, okay, which is they call personalized VAT. In fact, it's not really personalized. It's to use the money of the VAT that is not given for the rich because of exemptions, and assign them to the poor in some transfers that will compensate the tax on the poor. And in Brazil, this is doable because we have a huge program of guaranteed minimum income. So it's doable to do like that. and people who are thinking about the IBS, which is in the Câmara dos Deputados now, they are thinking about something like that. The second point is services. And to give an idea, in 2010, Professor Knox and me, and also our colleague John Garbett and good friend John Norgard, went there to advise the government on introducing services in the value-added tax. Okay, and of course, it was 2010. We had to watch the World Cup games also on the television in the hotel, and rooting for Brazil, rooting for Netherlands, and so on. Well, China was exactly like Brazil. They had a tax on, they call business tax, but it was a tax on services at the municipal level, and they had the value-added tax that at that time did not include the services. From 2012 to 2016, they reformed the tax little by little as Chinese style. And by 2016, they had all services included in the value-added tax. And they had an increase in transfers to the municipality. That's the way they compensated them. Of course, Brazil is not China, it's much different, and it's much more difficult to do that. But we have the same situation. The municipalities have the service tax, and the value-added tax does not include services except communication and part of transportation services. So the S in ICMS is not for services in general, it's just for these services. Well, what to do then? First, there is a very strong lobby of the municipalities in the Congress, and there is a very strong lobby of the service sector that had also always have privileged taxation in Brazil. And so it's difficult to take the services out of the municipalities, and it's difficult to increase the rate on services. About the first thing, well, there are alternatives. One alternative is what this so-called Project IPEA is proposing. Medina worked with that. This project, and also in the attempt to reform the system in '95, we proposed the same thing, was to have a retail sales tax at the municipal level and not the service tax. And the services will go into the base of the value-added tax. One big problem of this is that when you put the services that are in the municipality separate as an excise tax inside the value-added tax, most of the revenue that there is in the service sector is gone because many sectors are just intermediate services. So as intermediate services, they have credits by the buyers of it. So the states are not that much interested in buying that, and the municipalities were strong in not selling it. Okay, so it is a difficult question to resolve there. An alternative for this RST would be what is called the BVT, which is a proposal by Professor Bird and Professor Jack Mintz, which is the business value tax, which is a kind of value-added tax, but not the usual value-added tax. It's charged as a subtraction method. The other alternative is to increase transfers to the municipalities, but probably the municipalities won't take it. They want to have some tax on their own. So it's a difficult problem to resolve. And what the project that is in the Congress now is trying to do, and this comes to the criticism of Professor Bird and Nossin, and I also have serious doubts about that, is to have not a dual VAT, but a trial VAT. Trial in the sense of 3 levels, and trial in the sense that it's an experiment that never happened. So this is also a complicated solution, I think. And the complication is that municipalities are very open economies. Okay, and so if you try to apply destination principle in a very open economy that you cannot control for the flows of goods, it's almost impossible to do it. So I would have doubt about this. Finally, about tax design, Professor Nossen talked about the best practice VAT. Well, I think everybody agrees with those features of the best practice VAT. The IMF used in the past to call it modern VAT. Rita Feria calls it slim VAT, but it all boils down to the same thing, which is, I would say, a good sense VAT. Okay, and this is what should be done. But Professor Nossen mentioned, and Professor Bird too, 3 classes of VAT: the good, the bad, and the ugly. The goods are Canada, New Zealand, Singapore, and South Africa in his list. I would add some more. For example, the Gulf community VATs, they are really good. Bahamas VAT is good. Botswana VAT is good. And so these are models that we should look to. The bad is the EU model and the models of many countries that were designed after the EU model. And this is the bad tax that we should not copy at all. The good tax is always good to copy. And ugly taxes, they mention one, India, second, Brazil. Well, I agree that Indian tax is ugly, but we have to look at the glass of water as half full instead of half empty. And what they had 15 years ago, only 15 years ago, by 2005, India had a system of taxation in the States that was similar to the Brazilian system of before 1950 or 1930. They had a turnover tax, as we have the IVC at that time, tax on sales and consignments. And they had something that we abolished in the 30s, which was a export tax between states, an interstate export tax. Okay, they replaced this by a kind of value-added tax at the state level in 2005. And then, since then, they were thinking about this GST that they have now. But it was difficult to do it, and India is a very difficult discussion, probably much more difficult than Brazil. And in the case of India, they got to a GST tax in 2017, after several years of discussion. That was a compromise tax. So it must be ugly as a compromise of 20 states and the federal government. But it was what they could get. What they did there, they had the same kind of model that we are trying to copy in 95, which is the dual tax, Quebec and federal Canada. And they use something that we use, or tried to use in Brazil and could not. For example, they had some kind of modified CVAT, okay, which is what we called at that time in Brazil. It was a joking name, but it was that was the idea, the little boat model. Okay, we had that name just to call attention of the politicians to the thing, and then it was baptized CVAT by Charles McClure. And they also had another thing that we used in the country law, which is a complementary law of the ICMS. We had what we call here the revenue insurance. Okay? And they use it also. It's a guarantee that the state will not have less than what they had before, plus some growth rate. Okay? Essentially, the idea is this. In the country law, is much more complicated than this. But anyway, that's the general idea. And they did it. They did the reform. So now they have at least some ugly VAT, I agree. But they have a VAT instead of that crazy system of tax on exports interstate and plus turnover tax. About Brazil, well, I think that we have to have a fourth category instead of the ugly tax, the monstrous tax. And really, the only thing to do here is to kill the monster and start all over from scratch, using, of course, the experience of the past. And that's what people are trying to do. I'm not worried whether it will be one tax federal, one tax separate at the state level. I would not worry if it's a dual VAT. I'm not worried if it's an harmonized VAT like other states and federal Canada government have. And I would worry a little bit with the trial VAT. That's something that we have to think about. And that's what I have to tell to you. Thank you very much.
Thank you, Ricardo. It's always a pleasure to hear you. And now I will pass to our golden medal professor, our dear Professor Fernando Rezende, that is Professor of Public Administration at the Public Administration School of FGV, former president of IPE, Instituto de Pesquisas Econômicas Aplicadas, author of many books and articles on fiscal reform, fiscal federalism, and public finance. It's a real pleasure to have you here, Professor Fernando. Thanks again.
Well, let me say to start that it's a pleasure for me to be here in this virtual room with some friends and two well-known experts on the field. It was three, but now I have two. What I would like to start to begin with? As you know, Brazil pioneered in adopting VAT in 1965, based on proposals that were built in 1963 by a commission that was installed at Getúlio Vargas Foundation, in which Professor Schaub came here to Brazil, inclusive to participate in the discussion of this proposal. And at that time, I would say that Brazil has a pretty nice VAT, in pioneering a dual VAT, VAT at the state level, VAT at the federal level, with some flaws that were reasonable at the time, with the conditions we have at the time to adopt this kind of taxation. But in 1988, those that enacted the federal constitution tear down everything that was made at that time, based on a solid argument that was adopted by a military regime. And then it was not a good tax, a good system for a new democratic regime. Me and Ricardo work with a group of people trying to present some proposals to be discussed in the parliament at that time. But these were not considered at all. Particularly, they throw away the fiscal equalization regime that was adopted in 1965. And since then, Brazil does not have a fiscal equalization system. All criteria to share federal resources in the federation were frozen 30 years ago. So it's a mess. And this is a very important lesson that Richard Budd told us here. Without a fiscal equalization system, it's very hard to go ahead with any proposal for fiscal reform. I'd like to point out some important lessons that was given to us that are discussing this thing right now in Brazil. First one, there is not a figurine for all that fits all. Every federation inherits some traits, some characteristics of its cultural, its history, and its political realities. It's not different in Brazil. So trying to adopt a figurine that is good for some country, for sure will not be good for everyone. And that's a point I would like to stress, because besides that, Brazil is a special member of this federation world. It's the only one in which local governments has total autonomy, and it's a member of the federation as the states, the local governments, and the federal government. So it's really very too much difficult. After 1998, the number of local governments in Brazil increased a lot. So we have 5,500 or more local governments in Brazil. And most of them, let's say, 90% of them has less than 5,000 people. And only 10,000 of them, 10% of them have more than 50,000 people. So big municipalities, mainly in the metropolitan regions around the capital cities of any states, gets only 10% of the population. 10% of the resources shared in federal revenues, and 90% have 90% of the resources that are shared by the federal government. So what happens? Political realities in Brazil is a very important point to take into account when trying to discuss what we should be done. And what we have been doing in the past is trying to discuss tax reform with the states, not coming to the table, the local governments. It's not impossible. It's not going anywhere. Political realities meant also that the local government has a very important influence in the federal government, in the federal parliament, I'd say. Since the type of coalition that's formed in Brazil after 1998, Brazil has more than 30 parties, 32, 35, I don't know the number exactly right now. And this means that there is not just to have to discuss, you have to make an agreement with 3 or 4 different political parties. It is more than 30. And every of these small parties retains a huge influence in the national parliament. And that's a very important point I would like to stress here. So, second, it's not necessary, as mentioned by both professors in this table, to apply an identical VAT in the federal regime, or even have a uniform rate for all. The problem is how big the number of rates should be. Here was also mentioned that European Union, as called by Professor Nossi, is a bad case. There is a good, a bad, and an ugly. And that reminds me of a very interesting Western movie. There was three people. One was the good, one was the bad, and one was the ugly. And for sure, Brazil is the ugly in this group. And I would say that my opinion is that it will be uglier yet. As my friend Ricardo said, it is not be just a monster. It will be 3 or 4 monsters in the room. Why? Well, if you look at the specific details of the proposal that are being discussed in the Congress, constitutional amendment that is called number 45, it has the possibility, it raises the possibility of having more than 5,000 rates in Brazil. It is. They say that the rate will be uniform for all goods and services, but any state or any local government could change the rate for the transactions that are made in their specific jurisdiction. So we can imagine the mess that will arise out of this. I can't say how we'll go along this trajectory. So what I'm thinking is that we are doomed to fail again in adopting a tax reform, which I think it is better. Brazil, over these 30 years, ran the risk of trying to present to make a tax reform by making a detailed proposal to change the constitution. And as you know, the Brazilian constitution is one of the more extensive in the world in terms of number of items included in the constitution. So we get together a number of experts and design what should be a very good design for a tax reform in Brazil. And then people present this to the national parliament. The only instrument that is used to discuss this proposal is an Excel planner. People will look at what's being proposed and try to appraise who is going to win and who is going to lose in terms of revenues. And as is common in this kind of a discussion, those who are going to lose make very hard objections to any going in this direction. So what I'm trying to say is that we should begin, as Professor Bird mentioned very in this presentation here, that is very important to put people together, how we are going to discuss, and trying to get any way to solve different interests that are involved in any kind of a proposition to reform. So, and he did very important lessons. He mentioned very important lessons, besides those that were presented by other people. First, trust. There should be, people should trust each other in federal government, state government, and local governments. There is no trust. In any experience that I accompanied tax reform in Brazil, conflicts of interests were very high. Not for it, and for that reason is that everything that could not achieve an agreement in 1988, the solution was put in the Constitution to try to guarantee their particular position in that matter. Another thing that was mentioned in the table, a good tax design is essential for a good tax administration, and vice versa. A bad tax design could not function even with a good tax administration. I would like to stress that Brazil put a lot of money over these last 3 years to improve tax administration. And now we have very reasonable, I could say a very good tax administration with a very bad tax design. That goes exactly what has been said here. Cannot work. So a modern approach to regressivity. It was a very interesting point made by Professor Nossi, also by Professor Rita Della Feria. Regressivity should not be looked only at one side of the budget. If you raise money that impose more burden over the poor, it can be compensated if your expenditure gives more benefits to the poor. And indeed, it's more easy or more efficient to look at progressivity or to apply progressivity on the budget, on the expenditure side. And the experience of Brazil on what we call here Bolsa Família, which is a program of transfer of money directly to the people, is a very important, well-known program in this area. So that's a question that perhaps we should also take into account. Very important for the discussion we are having here in this room. Some specific comments to move to the finals. My final comments. Professor Nossi made an interesting proposition that I would like to see what she could tell us about that. It says, abolish a substitution in applying the contributions to what we have here, COFINS and PIS. I would ask him the following: why? This type of taxes are legally established in terms of business revenues. Is applied to business revenues. It's a fixed. Problem is that we have a lot of different regimes, but if you adopt subtraction method to apply these taxes, correcting all these flaws that the situation here, there is a solid rate applied to tax revenues, or business revenues, sorry, and with a subtraction method. I recall the very important book published by Clara Sullivan, I guess in 1980s or something, which explored the history of the value-added tax and the different methods that could be applied at that time. I'm sure that all of you know the book I'm talking about. It will be harder, to my opinion, trying to move and to adopt a VAT at federal level by changing these contributions to a method widely used to apply a VAT over why there is a tax credit and debit over the supply chain. So that's yes, the propositions that were made by both by those that are in this table also. I don't see a situation in which we could evolve in the direction of joint services and goods in a solid tax without, as I go back before, without discussing again what would be the new model for equalization transfers in the federation. There is a very important division of interests among states and local governments in political discussion on these matters. First, local governments. Local governments are politically organized in two groups: small populated municipes or less populated municipes and higher populated municipes. They don't agree in anything on this discussion. When we talk about joining ESS and ICMS, those that the politicians that run the big municipalities, it's totally against the idea. They are not willing to share the tax base that is growing, join it with a tax base that is shrinking. And small municipalities only the position to increase the proportion of federal transfers going to these municipalities. So it's very difficult to move in that direction. What I'm trying to say is that we should give a step behind. Instead of moving again and insisting in the same error that we committed over the years, I'm saying that we should put before that a dialogue, a very important dialogue, putting together federal government, states, and municipalities to try to see if we can follow the step that was followed in Canada. As Professor Bird mentioned, it took 25 years to achieve an agreement that we have now. We lost 30 years to do that. And my big question is that possible again to get any approval? What are the chances to approve what is being discussed in the Congress? Besides, to go to the end, I would like to make some provocations. First of all, as I've been looking over the years into the discussions on taxation in digital transactions. And the question I have is, how consumption taxation will face new challenges to tax these digital transactions. VAT was created to solve economic inefficiency problems rose by the Industrial Revolution. Books on business organization are mentioned a lot of changes that business organizations are the way or business organization change the way to produce and sell goods and services over the world. So it seems that that will raise some challenges for applying VAT in the destination principle in the future. As Clara Sullivan mentioned in her book, VAT took more or less 30 years to be adopted. She says that beginning of discussions to apply a non-cascading tax began in the 1920s or something like that. And it took about 30 years for the first experiences be adopted, first in France and then in Brazil, even though Brazil was the case of adopting VAT to the retail stage, which was not the case in France. And VAT spread over the world, began to spread over the world in the 1970s and most in the 1980s. So I don't have any proposal. I'm just trying to explore what would be the word in as 21 section, the 21 sister will, how long it will be survive over the history. Should we be concerned about that or not? For instance, if it is proposal that is being discussed in Brazil goes ahead, I guess Ricardo mentioned that, how we are going to identify, how we are going to apply the destination principle in the municipalities. Since every municipality could change the rate for any kind of transactions in their jurisdiction. And also, the fiscal equalization regime is adopted, are in place in the world, basically tries to, let's say, reduce disparities in tax receipts due to concentration of the tax basis. So as what I knew in the Canada case when I worked with the foreign federations was that, well, those who cannot collect revenues, enough revenues to meet their responsibilities, should get a transfer such as to reduce the gap they faced with the richer localities, the richer states and so far. But what I'm thinking, well, it will be even difficult to locate where the activity is being done. So how a new federal equalization transfer should be designed? What would be the criteria for applying a federal equalization system if you don't know for sure when the tax is being, or where the tax base is, already the tax is being collected? Some concerns. And, I'm not going to say anything more, just to think that this kind of discussion should be considered in details by those that are trying to discuss how Brazil is going to apply or to substitute a good VAT for an ugly VAT, and not doing the opposite, make it even uglier and harder to move in the other direction. This is a very important discussion. I think I will try to do that. I'll try to perhaps write an article to say and to try to sum up what was presented here in this table. I think it was very important, Melina. Your initiative was very good, and
I think we lost Professor Fernando, but I think he was finishing. So I'll move to the reactions and final comments and final remarks. Sorry, Professor, do you want to finish? Professor Fernando, I think we lost you for a moment. You're on mute. We can't hear you, Professor. Just unmute yourself. You have to unmute yourself down. Yes, great.
The problem is that internet here in Brazil is very bad. So frequently some kind of thing like that occurs in this kind of meeting. But that's to thank all of you again for lessons you presented for us. And I'm very interested in keep learning from what have been said here in this table.
Thank you, Professor Fernando. So I'll pass to Professor Sebran Gnossen for reactions, comments, and final remarks, please, Professor.
Thank you very much, Melina. I was very impressed by the comments by Ricardo, of course, and I still fondly remember our mission to China. And I was also intrigued, very much intrigued by the comments by Fernando, because he knows the situation. I don't know. And I have a few reactions. First, on the municipal service tax, of course, I think that Richard Burt and I were not proposing to integrate it with the VAT, but to impose a gross receipts tax. And there, of course, the destination principle or whatever, or the tax credit mechanism does not apply. It's simply a low rate gross receipts taxes, as many US states have or had in the past, and which can fairly, it's a rudimentary form of taxation, but as long as the rate is not too high, it can do the job that it is designed for, and that is raise revenue for the municipalities. Of course, the digital taxation, I would highly recommend the OECD report on it and the discussions taking place at the OECD. There are solutions being found. If we have digital transactions, we can also have digital invoices, and we can have reverse charges where the recipient of the service is liable for the tax and gets a credit at the same time. And the same applies to nexus issues. I fully see the problem with platforms, etc., where but the nexus issue is much more related to the corporate income tax than to the VAT, I believe. And these were my main responses to the questions that were raised, Melina. Thank you very much.
Thank you, Professor Gnossen. So Professor Richard Burt, please, can you say your reactions and final remarks.
Well, my reaction is that, as I think I mentioned, I began to think about these issues in Brazil 30 years ago, and I'm glad to see that Brazilians are still thinking about them. What I was trying to tell you is that over those 30 years, we kind of managed to resolve some of them in our case. I think Brazil is a much more complex case, and you identified several of the reasons, and I particularly was taken by Fernando Rezen's picking my equalization transfer point up. I think that's really very important. Actually, one of the things that I'm basically a tax guy, but I've spent a large part of my career working on intergovernmental finance, so I think a lot about these transfer issues too. One of the things that I've thought about a lot in the tax field is how often we just forget about the social insurance funding, which is a pretty heavy tax on a lot of people in the formal sectors. And then we also heard today quite correctly that you need this offset. You have the Bolsa Familia type thing that you can go and transfer a lot of money out to a lot of people. Well, not a lot of money, a little bit of money to a lot of people, and make a big difference in the sort of net thing, and kind of getting these things tied together, that people see both sides of the transaction and believe both sides of the transaction are going to take place, is pretty important to the design of the tax. So you've got to kind of integrate your thinking about transfers to people with taxing people. At the same time, and this is why these are always more complicated issues in federal countries, you have to think about the relationships between the different levels of government. Brazil has this incredibly detailed and complex constitution, which is made 5,000 times more complicated than it really should be because of the inclusion of municipalities in the constitution, which I'm sure they're all delighted to, but see it as really a recipe for most of the small ones for just being transfer dependent. But that makes it very difficult to think of how reforming taxes in the federation without also thinking about the transfer system to the other levels of government, how all that works. So think of the problem you now have. You've got to think about not only the design of the tax system and how to administer it at 3 levels of government, you also have to think about the relationships between these 3 levels of government, and you've got to think about how you can sell all of this package to people who kind of think all taxes are bad, especially any I think I'm paying, and who also receive a lot of services and transfers from government. So you think, in other words, to solve any one of these problems, you have to think about them all. Now, the one thing we know is that our minds are just not good enough to think about everything. So we all pick out some part of it and look at it. Were I thinking about this issue in Brazil today, I think I would think of it as a 3-stage problem. I kind of said this, but let me just make it clear about it. I think the federal government can and should clean up its own value-added tax in that terrible excise tax conglomeration thing, put together a decent federal sales tax in the value-added format. I think as a second issue, they should be working closely, as Fernando said, and as I said, it's going to take a long time to get it all negotiated, with all of the states trying to get their systems better in the interest of the states. That's the point. They've got, and some of them probably will be willing to be, passengers on the federal system if the richer states won't. I mean, I can't believe Sao Paulo would ever do that, for example. But that's okay. You can make deals. As long as you're prepared to make different deals with different kinds of states, you can make almost anything work. That was my argument from Canada. Thirdly, the municipalities. You cannot do that at the municipal level. It's just too complex. As Fernando quite accurately said, what you have there is a very heterogeneous set of things. He simplified it by saying get the metropolitan and then the small. Yeah, but you have a lot of people in the middle too. When I think about these issues, when I chaired the committee on all this stuff in Colombia 30 years ago, when I think about these kind of issues, I think of there being 3 levels. I mean, we've got to think of the big ones, we've got to think of the little ones, and we have to think very importantly about those that are becoming bigger, or in some cases becoming smaller. I mean, the transition case. So you always sort of need to have different systems. The trouble with the Brazilian constitution from this point of view is it treats a municipio as equal to a municipio. Now you do have this association of municipios and so on in Sao Paulo. You have different attempts to get a little beyond this. but it makes it extremely difficult if when designing national tax and transfer policies, you've got to think about every little rural village. It's a real problem. So I would think the first problem, get the federal government system right. And I don't actually understand the funny named ones, COFINs and so on. Those kind of, it strikes me as an odd way to finance some social policies. But you know, if you can put those things in, fine. If you can't, leave them out. I mean, don't take on fights you don't need. But the dealing with the states, that's going to be a big issue. Work it out. Municipalities, I really think they need a decent revenue source. Now, the interesting thing is the big cities could and should be largely self-financing. I worked on, with the Inter-American Development Bank, we worked on financing metropolitan areas some years ago. They're still doing a lot of work in this area. I think there's a real case for the larger areas having their kind of own business tax. As Sebring quite properly said, this is a quite separate issue from the value-added tax. But the key issue, and the one that I think would have to be resolved, he said a low rate gross receipts tax. Yes, it should definitely be low rate. But the really important thing is that it be uniform. If you let them levy gross receipts taxes at any rate they want, on any industry they want, everybody will universally tax their export business. You know, the place where the local power plant will be, taxes will all be on generation from the power plant. The place where there isn't you know, the only thing that happens there is they export a lot of coffee or something. Well, they'll be looking at to try to tax the farmers. But it's if you allow them to have non-uniform taxes. So my system, usually I want to say you have a limit. You have to have a minimum tax in this area because I don't want you stealing everybody else's business. But there's also sort of be a maximum tax. So you'd like to get a structure where you have a kind of a range of taxes within which they can set their rates, but uniformly applied. And I haven't seen any discussion of this kind of issue at all in Brazil. And I think this is I think localities do need a new system. And you do the equalization at the municipal level, essentially at the federal level, at the municipalities. That's very odd. I think that actually you need two equalization systems. You need an equalization system, federal, state, and also well, in our terms, Canadian terms, provincial, municipal. We don't have those systems in Canada. That's one reason we have a real problem at local government finance. I'm currently working on another project on developing a provincial municipal equalization system for the province of Ontario. But it's a big and difficult issue, but that's very much a big thing. I think it's a third and separate question. So if you can separate out the municipal issue from the federal state issue, that makes it fairly clear. But I think you can also do things just at the federal level. Now, the trouble is you've got all those percentage allocations, you know, the shares of this go to that. And as Fernando quite correctly said, you can always tell people who've worked a lot in the tax business because they're not cynical, but they're realistic. I have never been in any kind of a negotiation in any country where at some point you don't realize that the people around the table are mainly interested in how much money does this mean I get. So people really do care about these things, who gains, who loses. And sometimes I remember some negotiations in South Africa, for example, on really equalization systems, where the question was, a lot of people wanted this special treatment of this sector or that sector. And we just played with numbers, as Ricardo showed you in his little example. We just played with the numbers that we had in South Africa, which at that time were not much better than those he had in Angola. And we're able to show them, but simply by using one ratio, which everybody agreed was more or less right, we could get the results everybody wanted instead of these very complicated cases that Western Cape and so on was trying to bring in and solve. But you have to really know the country in detail and be prepared to work and negotiate at length to get any resolutions in these things. So I think you have done well. I was glad also that Ricardo mentioned something I'd forgotten. My own teacher in this area was Carl Schelm. And he, while shortly after I was his student, he went to Brazil and wrote a little paper on the Brazilian VAT, which was then a world pioneer, being the first one ever to go to the retail level and so on, and also had this curious sort of federal state thing that he didn't understand, and I didn't understand either. One of the reasons that Brazil is a much more difficult problem is because of the municipal area. India, they neglect that. So they didn't get into that mess at all. They just messed up all their municipalities on their own. So they're quite separate. In the US, that's a major reason they've never gotten into a VAT, precisely because there's some 4,000 American municipalities with their own sales taxes. It's not 50 states, there's 4,000 municipalities. And that's a really big problem. Every American I've ever talked to about VAT, in about first 2 minutes, gets to this question of the local sales tax, which simply wasn't an issue in any of the other federal countries. So it's I think you've got a very big bunch of problems there. But getting everybody together to talk about them, trying to get some ordering, trying to focus on these different areas, we can hope that in the discussion you're going to have about this 30 years from now, one where I will not be present, that you will have some solutions. So I wish you all the best. And let's hope someday I can go again to Brazil.
Thank you very much, Professor Richard Bird. The only thing I can say is that it was amazing. I don't have words. Thank you all for all the amazing presentation and discussions. Thanks again to ABDF and our audience. And I will pass to the next, only to Marcos Catão to the final words from ABDF. And thank you very, very much.
Thank you, Melina. Thank you all. No, I like again to thank you so much to be here. I just want to say one very quick remark. No, I mean that just first of all, the data. No, the U.S. in the last year had a deficit of $800 billion. In 8 months, U.S. Has right now more than 2 trillion. So clearly, we must have a fiscal response to this fallout that you have around the world. You know, I mean, I don't want to be very assertive on that, but countries and states and municipalities, they will need to create a new tool for this crisis. You know, I mean, I'm not in favor or against the VAT model in Europe or against or pro the traditional way of tax based on income. But having heard of what you said, that I think we all agree that we need to create a new tool for that. I assume that, and I don't want to go back to this this issue of the GAFA tax or whatever, no, but I don't see other solution to have a new tax in terms of technology and digital taxation. I think this is very important. And just one comment, no, there's a second comment, Richard, I say that it's very difficult to defend or the Brazilian system. But there's one thing, you know, for sure, you all know that Brazil will have this super high complexity in terms of pre-VATs. But there's something that's happening in Brazil that can be considered very innovative. I don't know if it's good or bad. But in the last 5 years, you know, the metropolitan areas in Brazil, which responds for almost of 70% of the Brazilian population and responds to 95% of the Brazilian gross income, they create associations called ABRASF, which is basically the association of the financial secretaries in Brazil. It's called ABRASF. Now they have a representative in Brasilia. They defend the rights in the Supreme Courts. No, and I remember that one thing that my brother's from the IMF, he's the economist of the IMF, told me one thing that for me is very representative. You see in every country in the world, cities are becoming independent of the big cities, what we call metropolitan areas, they are becoming independent of the countries. You see places like in Spain, you have per capita income in one city, which is 3-4 times more than than other cities. You see Brazil for sure, because you have this high level of inequality. But we're gonna see in the future cities becoming more independent and more rich and more structured in terms of taxation. For this reason, I see that we can see in the future, big cities pressuring for a different model of taxation in their favor. This is happening in Brazil now, as I mentioned, this association called ABRAS. So I see that this one thing. I think that Melina, I'm sorry to say that, I was supposed here to be just say thank, but when Richard mentioned the municipalities, I think that here in Brazil, we have something that's happening in Brazil, and I think that's something that we're gonna see worldwide, especially because we're moving to digital taxation. In digital taxation, some is very local in the end. I see all the difficulties, all the complexities to tax digital economy based on VAT. We're gonna have to think about reverse charges, how the young boy, how my kids, they buy on the internet. You must think about that, and I think that's the right way. We're moving to a service economy and to a B2C economy. That's the point. And I think that we're going to see municipalities playing a different and very high, very important role in all this discussion. Okay, but again, I'm here just on behalf of BDF. Congratulate you all. Thank you all again to come and to be with us, and thank you, Melina, and again, Anna, to organize such a very, very, very skilled and very deep event.
So thank you very much again, and it was amazing, and hope I can hear from you more in the future, and thanks for all your comments and suggestions on Brazilian tax reform. Thank you very much. Bye-bye.
Thank you, Melina.
Bye-bye, Professor. Bye.
Bye. Thank you.
Thank you.